Welcome to today's market report. European stock markets weakened on Friday as a rise in COVID-19 cases and associated lockdowns weighed on recovery hopes. DAX in Germany traded 0.3% lower, CAC 40 dropped 0.6%, FTSE 100 fell 0.6%. The growth outlook in Europe is weakening as the third wave of COVID-19 infections leads to further mobility restrictions, further delaying the economic recovery. Germany, the largest EU country in terms of population, recorded Thursday the biggest daily rise in confirmed coronavirus cases since 22nd of January. In addition, France said it would put 8 regions, including regions around Paris, back into a tighter form of lockdown for a month to stop the disease's spread, while much of Italy is already shut down. The EU drugs regulator did confirm on Thursday that the benefits of AstraZeneca's COVID-19 vaccine outweighed the risk. But the earlier suspension of the use of this drug by a number of European countries has been another factor slowing what is already a sluggish vaccination rollout across the EU. Adding to Friday's woes was a negative handover from Wall Street after the tech-heavy Nasdaq Composite Index closed 3% lower on Thursday, with a spike in US bond yields prompting investors to see these stocks with very high valuations. The yield on benchmark 10-year US Treasury notes stood at 1.69% on Friday, after spiking late Thursday to 1.75%, the highest since early 2020, a day after the Federal Reserve raised its growth and inflation forecasts, but stated it would remain its very accommodative monetary policy through 2023. Oil and gas companies led the declines, with BP stock down 2.1%, Eni stock fell 1.4%, and Total stock fell 0.8% after crude prices slumped overnight amid worries over the new lockdowns and thus the slow growth to global demand. Barclays stock fell 1.3% despite the UK bank launching a £700 million stock buyback plan, while British pub chain J D Wetherspoon stock fell 1.5% after reporting the first half 2021 loss as the pandemic and associated lockdowns severely hit revenues. NatWest Group stock, however, rose 1.3% to a post-pandemic high after saying that the government had reduced its stake by around £1.1 billion. ICAG stock fell 1.9% despite reports of the owner of British Airways mulling a sale of its headquarters building to raise cash. US crude futures have rebounded to a degree and traded 1.5% higher at $60.95 per barrel, while the Brent contract rose 1.4% to $64.19 per barrel. However, the contracts have still dropped more than 7% each this week and are on course for the biggest weekly loss since October. Gold futures rose 0.6% to $1,743.05 per ounce. On the FX front, the US dollar witnessed some selling during the early European session and pushed the GBP USD pair back above mid-139 or fresh daily tops in the last hour. A modest pullback in the US Treasury bond yields from the over one-year high of 1.754% touched in the previous session exerted some pressure on the US dollar. In turn, assisted the cable pair to stall the overnight rejection slide from the key 140 psychological mark and regain traction on the last trading day of the week. Meanwhile, the calmer tone in the fixed income market provided a modest lift to the global risk sentiment, which was seen as another factor that dented the greenback's relative safe haven status. That said, the optimistic US economic outlook should help limit the US dollar pullback and cap any meaningful upside for the GBP USD pair. Reports about the likely shortage of COVID-19 vaccines in the UK might further hold traders from placing aggressive bullish bets around the British pound, A significant reduction in vaccine supplies could derail the UK government's plan to exit the current lockdown and dampen prospects for a faster economic recovery. This comes in on the back of Thursday's rather dovish statement by the Bank of England, indicating that the outlook for the economy remained unusually uncertain. Moreover, repeated failures at higher levels further warrant caution before positioning for any further appreciating move amid absent relevant market-moving economic releases. The euro keeps the erratic performance well and sound so far this week and now prompts euro-dollar to bounce off early lows in the 119 neighborhood. The dollar index was down 0.1% at 91.689. Dollar yen was at 108.760. This is today's market news. Thanks for listening. We'll see you next time.